welcome everybody to webinar 8. Welcome new people, welcome old people. Same thing goes. We are going to have questions drop throughout. We're just going to talk as a team, look at some markets before, basically an hour before it opens, because it should be opening soon. And that's pretty much it. And look at some stuff from last week and work through some concepts, work through some refinement, work through some issues, concerns that people might have, work through some psychological issues, whatever it might be. And we will get started with that in 1 second. So for any of you that do not know yet, and that are here right now, this video, this one specifically, the 1 week of trading, watch this to understand top-down analysis. If you go to it and comment anything with hashtag mentfx, I don't know if you guys have seen this one yet, but if you go and do that, you enter a free spot for the mentorship. I know you guys are in it, but there's 4 free spots that I'm giving out, and it's only for 1 month. So if you guys do win it and you comment on it, I'll just refund $100 for one of the months that you guys are going to be here. So, you know, free money. Go ahead and drop a comment. It really has nothing crazy, you know. So feel free to do that, and stay tuned for the video coming out tomorrow morning, because it's something we're going to talk about today a little bit, which is a little bit of the retail / institutional side, and what actually focusing on an institutional analysis or an institutional way of viewing the market can do for you. So we'll do that too. Look at the cool merch. Great to be here. Waiting for mentfx mug to arrive. Yeah, so I set this up for anybody that's interested in it. It's all through the website. So like they print and they make everything. I literally ordered myself and my girlfriend one of these, and then I dropped this one because somebody gave me a design idea for this one, and I'm so sad because I kind of want to get this one too now. We'll see how it goes. So yeah, if you guys want the merch, it's available. I dropped the little link in the Discord in the announcements page. It should just stay there, nothing crazy. There's some other stuff on here if you guys want it. If you guys have an idea or actually want something printed, just let me know. I might add it on here. So just let me know. It's very simple, nothing crazy. I think the hoodies are the best. The shirt's fine, but you know, like the hoodies are where the is at. Oh yeah, and the mug too. And the face mask for you coronavirus. Hoodies calm drip. Exactly. All right, anyway, so let's talk a little bit about something interesting real quick. So I was looking at Bitcoin over the weekend, and again, as you all know, I kind of talk about some potential entries. I did not, by the way, just so you know, I did not take any of these entries on Bitcoin at all, but I do analyze and stay analyzing charts like throughout the weekend, even if I'm not trading, right? And I just do this to keep myself in the game, keep my mind on the concepts, keep my mind in the way I like to trade, and just to see it happen over and over again for my own mind. Okay, bro, we have the same markup. Perfect. Yeah, I mean, it's not hard to, once you start to see it, it's not hard to start marking these things up, because you understand how order flow is being delivered, and you also understand that neither of these have to be true. The only thing that has to be true is the way it moves. And the second this breaks, you know that you're not losing on any of that. All you know is you have an opportunity to get into something new of sorts, right? You instantly understand that your bias can constantly be intertwined and changed. That's the beauty of smart money. You're never confused by that. At least once you learn it, that is, right? So something I do want to talk about was a little bit of this Bitcoin markup, because I did actually place these trades. I did not take the trades, but I placed the trades, like the little long positions, into the trading view before they happened, just to watch them happen, with partial areas, of course, that I'll talk about right now. But for new people, it'll again give you a little idea of almost like a mini backtest of how I viewed this market at the time of viewing it during the weekend, and how I went about analyzing it. So very quickly, the same way we do with anything, we always move from a top-down analysis. And we're going to do some more community outlooks, because I'll be doing a lot of EU or gold this week, probably more of EU. So we'll look at EU together. But very quickly, let's take a look at why it is that I have the certain bias I have, and what trades were available to you had you been trading on the weekend. Okay, and there's probably a lot more, but under my assumption, this is what I had. Okay, so we have this push down, we have this push up. Okay, we all understand this is a break of structure higher. We are still in a very bullish trend. We've always have been on Bitcoin. We've been bullish since literally down here. If any of you remember that, anyone that's been here a while knows that a lot of you have asked me about Bitcoin, and I'm like, guys, it's bullish, it's bullish, it's bullish. And since that, it's at 64K. So, you know, we're professionals here. So we had this break above, and that break came from, and you guys would all agree, this demand zone right here, the last down move before the up move. Now, if you follow your eyes with it, you'll notice that there's a demand zone 2.0 or whatever you want to call it, or a demand zone that tapped into it, invalidating this demand zone, but also creating one inside here. Now, you could go and find the valid one, which is this one right here, but remember that, you know, just valid ones does not always mean that it's going to be the perfect mitigation. So in this case, this low here actually came below it. So when I drew this up, I actually did use this one, but I also kept this in mind, using the entire down move, the entire section that can be still considered a protected low. So we got rid of this. As you can see, I have a little mitigation here. So that got mitigated. Really, I cared about this holding, right? So even if this little low here didn't hold, which it didn't, with this little low actually took it out by like 0.01 or something. We had another push up. Again, that push up, same thing. The last down move before the up move. Now, as that occurred, we had the pushes down occur, and short term we shifted candlestick structure bearish, right? At this break right here, came right back up to test the last supply zone that was unmitigated, tested it with most likely than not a Wyckoff schematic inside there, and dropped down, breaking structure again, potentially expecting it to come back into here to trade lower. It didn't do that, came to make a new high without tapping into this. Okay, so let's again follow the story. It doesn't matter that we didn't tap into the area we expected to tap into. All that matters is that we're following a story and we're trading the intermediary movements of that story, right? That's what we do as traders. We don't need to be correct. Our bias does not have to ever play out the exact way we want to play out. And this actually goes to answer a question that I saw that I wanted to bring up really quickly because it just stuck in my head. If I can find it, that'd be fantastic though. Oh, I must have missed it. I don't know where the question went. I thought there was a question here about it. I think I saw it earlier, but the question was something along the lines of, you know, how do you not get too attached to your bias? And the real answer to not getting attached to your bias is asking yourself one yes or no question, right? Look at yourself in the mirror, whatever you got to do, and ask yourself this question. Say, am I the composite man? If the answer is yes, then you should stick to your bias, hands down. But if the answer is no, and you know that you don't have more money than the composite man, and you're not the composite man, then your bias doesn't mean jack shit. All it means is it's a potential idea about what the market could do, an idea that is literally in a pool of millions of other ideas, and something that you would execute upon if you saw the things that you wanted to see. Remember, this game is playing around the things that you want to see happening, and then executing upon those. What's interesting is, I mean, I also check out other YouTube content and shit like that all the time, even retail stuff, just because, you know, I keep myself in the game. And this one retail trader, he's actually very successful. Good for him, amazing. You know, like I tell you guys always, you can be successful trading retail too. One of his biggest things that he talks about is that all you have to do, he'll show you like 5 different patterns. He'll say, here's your ascending triangles, your like descending, your channel, your head and shoulders, right? Wait, how is it? Head and shoulders, right? Entries here, so on and so forth. And there's like 20 of these. And what he says is pick one of them and just trade them fractally across anything and only execute those and have an idea about how you're going to do that. That's exactly what we kind of do, but on a level that takes us the extra step, that allows us to do it fractally, lets us do it intraday, almost any time, but also allows us to understand why we're doing it, okay? So again, let's just talk a little bit more about this Bitcoin markup and what you could have done with it, and how we can expect it to go down into the future, right? Again, we have the breaks higher. Those breaks come from multiple areas. Again, here's the question about which area do I use? Well, you use them all because you recognize that all of them have the potential to mitigate orders and act as potential areas of liquidity creation, order fulfillment, and either manipulation or reversal. Okay, you're always thinking about multiple things in this market. You're going to learn how to push yourself away from even thinking about the market in a structural and only structural sense, but move yourself towards a sense of where's price reaching into. As it reaches into, is it reaching here to go higher, or is it reaching here to come into an area here to reach into it, to reach into that lower area, to liquidate this area, to then reach into this area, to reach back into this short-term area, reach into this area, to reach into the lower area, liquidating this one, to finally reach into that higher area, right? This is how you're going to start to slowly move your focus from just structure-based trading to zone-based trading. Because what we actually do is more zone-based, but it's also based in the fact that structure occurs. Because when you know that this zone here caused this structural break, you understand from a fundamental level that if price is to come into here, this is all for the accumulation purposes of going higher, right? As you all probably understand. So again, we get that break right here through this high, and we have a few zones that we can look at, right? This one's still valid from a long time ago, and as we start trading lower, you can see we have no mitigation in here at all. Just comes right through it, right? Takes it out with a break of structure downwards in an upward structure, right? So again, ask yourself about institutional structure versus candlestick structure. Yes, candlestick structure is doing this, right? But also institutionally, what is structure doing? Institutionally, structure is moving something along the lines of this, right? With a potential move back right now to continue even higher, right? You always have to be asking yourself, how is institutionally price moving and how is it moving candlestick wise? Because the candles help you get involved. The institutional keeps you looking at multiple biases that you can have, okay? So look at this daily again, and we recognize that we have this break. We have some retests of some areas in here, doesn't really matter, and this breakdown. And now where does this breakdown come right into? That zone that we had, and in there is where we look for those white coffee setups to go higher. There probably is one in here. You can go check it out yourself, right? Go do some individual study on that. It mitigates that zone just like we expected, and now it begins to take off. As it takes off, what does it do? It breaks intermediary candlestick structure, and where do we know that it's reaching up to? More likely than not, it's reaching up into some last up move before the up move in here, which you can go and refine on a lower time frame, because in those areas you're expecting price to either tap in and then continue on this overall distribution to then reaccumulate if it wants to, you know, but you're expecting this. Or if it's not going to give you anything inside here on any time frame, even with the rule of 30, then you know that you can expect this, right? And even if it does do that, the mitigations inside of here can still provide you good RR and trades. Because remember, we're not here to catch the entry from here to here. We're here to catch the entry from here to get stopped out here, to then catch the entry maybe here to get to here, to then take a buy off of this, partial it here, get broken even, and then maybe we get lucky, catch a buy here that we get to manage all the way back up to new highs, right? This is how you have to consider the market. We are not people that are getting involved like smart money and trying to hold ourselves all the way through every single swing and stuff. There's no point to do that, at least for my end. Maybe some of you like to do that, that's fine too. Either way, so we have these breaks. Those breaks come from two areas, and we expect that if this isn't to reach up into here now, we can expect it to reach up into there as it taps into here or as it taps into here, right? Constantly evolving your buys. Now with that in mind, we can go and speed this up a little bit because I do want to start reading through some of your questions, guys, and I am seeing them. They're just on the right hand side of my screen. You can see that as we came down here, we broke structure higher here. I think this was on a 1 hour chart, just to show you guys really quick. Yeah, so we broke structure higher here, which we understand can mean that we're looking for entries off of the last down moves before the up moves into here, right? Now with that in mind, as we get lower inside of that same movement, right, here's that break of structure, we can find the imbalances in areas that still have not been mitigated that can be mitigated now for potential higher prices. And as we come to mitigate those, notice how we do that. Let's get down to a 5-minute chart, right? You can see that we begin to put in lows. We put in lows and we liquidate those lows. And then what do? We break structure. Now at that point, based on how you like to trade, you already have valid entries off of this last down move before the up move to take it higher with partials, and potential completions, right? That's one way to look at this. Now, I myself, because I wasn't even trading this, I was just confirming it over and over again. I took this area and did the same thing. I confirmed it. How did I confirm it? Well, let's get inside of that. Let's go to a 1-minute chart. Now, as we're on the 1-minute chart, I actually confirmed this off of 15-second, I believe. So let's go take a look at that on the 15-second, right? Take a look at what we have. We take a look at that same area and notice how it approaches that area, right? Nothing different. Lows being manipulated, right? Selling climax, AR, ST or ST, right? Potential sign of strength in phase B, STB, spring, break of structure, sign of strength. What do we expect? The last down move right here before the up move functions as your area of entry. We mark that out, right? Here we go. We can mark that out. And that's where, as you can see, price comes. There's no question about what happened here now. As price comes here, what do? We partial above structure because I like to do that, or you hold it for potential higher prices and price actually comes back. Does it take you out? No, it never actually takes you out. So it comes back in and gives you another entry. Now, if you don't have the second time frame and you don't want to do that, I already showed you that the 5-minute chart had a perfect entry already. And also, if we look at the 1-minute, if you actually watch this from a 1-minute perspective, let me go ahead and delete some of this. Here we go. If you look at this from a 1-minute perspective off of that same POI, lows manipulated, right? So again, in here, you have some kind of selling climax, AR, ST, STB, so a type 2 schematic. Now, break of structure, where's the last down before the up move? Right here. That's another possible entry, as is, right? And as you take it, you understand how you can take that to the top side. And right now we're in that bias to, again, make our way to here. And if you miss this, there's no need to FOMO, because the second you bring yourself to a higher time frame and look at this, you recognize that the next opportunities will present themselves in the last down moves before the up moves. So if we are to tap into here right now and see a confirmation off a lower time frame, because I like to trade Wyckoff confirmations, then I will be involved in that move right there, right, to take it higher. Does that kind of make sense, guys? Same thing over and over again, just a breakdown of weak hands being transferred to strong hands, always. Okay, let's look at some of the questions, some of the stuff in here before I move on, because I did want to look at something I'll be talking about tomorrow in the video. Oh, and if any of you remember, for EU, I actually took a sell here, and that was a shitty one. I updated you guys in the mentfx trade ideas on this, but I did say that Friday should see prices basically come to here and basically kind of close around this area, and lo and behold, that's exactly what we saw happen. So that was pretty cool. You know, just nice to see price deliver the exact same way we expect it to deliver. But now let's take a look at some questions, because I want to make sure that we get through it. All good, all good. You guys can hear me good. Look at the cool merch. Yes, yes. Could you give your opinion about algo trading? It's great. Just don't copy anyone's algo. Go and make your own algorithm. And we will talk about algo trading in one of these webinars, I promise. I might make a recorded video of talking about algo trading or something for next week or something. I'm going to be in the Bahamas next week, so I might not be able to do the Sunday webinar live, so we'll see. If internet permits it, then I'll do it, no problem. But we'll take a look at that, and we'll see what we can do. Coffee mug looks clean. Thank you, Drip. Hoodie is calm. Appreciate. Hoodie giveaway to mentees. Hey, maybe, actually. We have the same markup. Yeah, exactly. So if you know, like, what's funny is a lot of us might have the same markups, but some might still trade poorly and not have good trades, and some might have amazing trades. And that all comes from the standpoint of understanding how you want to execute a system, okay? I'm not an internet merch guy, but white with an M is clean. Thank you, man. Yeah, I mean, I didn't even expect to want it as much as I did after making it. The reason I even wanted to make merch, it's not for the money, by the way. I mean, I know they're $69.99 or something. I make like $30 per hoodie that I sell. I don't care about sharing that because it's not a big deal. But I wanted to wear something that had the M logo on it because I always thought it was clean, so I'm happy with it. Frankie Forex, let's see what you got here. Bitcoin USD, yep, exactly, perfect. That's exactly the entry we just spoke about, right? So you have the POI, price taps into the POI, transferring the weak hands to the strong hands. This is the last strong hand movement, basically, that's what we can call it, or the last demand zone. Price breaks higher, entry off the demand zone, some area that you probably refined inside here, which it looks like, taking it higher. Already at break even, most likely, you should be looking to target that higher supply zone, or even the higher supply zones here, or even the higher one that I had linked out, right? Perfect, right? This is how you execute under the concepts. And what's interesting is if you look at the zone he had selected, he had another zone that he was looking for a buy at. Now, if you look at it, there was actually a potential loss here. If you were on a low time frame, this could have been a loss, or even a break even, or even in some cases a partial, based on how you traded this, right? Here's lows that are liquidated and manipulated, the break higher, the retest of that, and then you see it come right back off to test the supply zones in here. So if you had taken this as a partial, then this is fine. Or if you take it as break even, that's fine. Or if you didn't, then it's -1. But that's it, right? Then if you take your mind to the next one, which is technically this one right here, and you watch this again, there's lows, lows, manipulated, manipulated, the break of structure higher with the wick right here, the retest of the last down before the up move with this wick right here, and then the move higher, right? So again, I know that it might be a little hard if you're new to see what I'm talking about right now, but there's Wyckoff right there if you go into a lower time frame, right? It's all there. Like my mind can only see Wyckoff at this point, which is where you guys are working to be. So for those that can see it, fantastic. Yuri, let's take a look at your markup. So this is also Bitcoin, fantastic. So you had a very similar thing. Yeah, so exactly. Very well done. Yeah, you had your Wyckoff. Yep, so you have it drawn out too. Found a sell up here, that's great. I can see a miniature Wyckoff inside here. I probably wouldn't have been involved in this because I can't see. So if I saw Wyckoff here, there'd probably be highs, liquidated, the break of structure below this low here, and this was a retest of the mentfx block, but never came up deeper, which looks like you also didn't get into it. So same thing. Comes down, gives you the overall schematic that you have technically over this whole thing and also inside of here. So there's a fractal one in here and a larger one here. Fantastic. Sign of strength, not sign of weakness, but you know, it doesn't matter about the labeling. Another fractal accumulation in here. Perfect. You have the entry off this one and the entry off that one. Exactly what we just spoke about. So again, for those of you that are doubting or are new and are doubting and don't really believe that this is all possible, these are all looked at after the fact, and you can see how the bias is preset in the same notion and the same entry criteria are being given to these entries, right? So that's fantastic. Nick Rakina, GU bias. So this is a 3-hour chart. You're saying this is buy side liquidity. Okay, that's fine. So we have this really ugly schematic. We have this huge break. So on a higher time frame, we're breaking down right here. Cool. We had this push down, more entries here, push down, create a bunch of liquidity here. Good. Expecting that to get cleared and that to get cleared. That's fine. Pushes up to here, playing in here, looking for it to come right back down into here and buy up into there. Yeah, so that's fine. This is a fine bias to have buys in here. I don't know about this zone. Just, oh, so you're looking to buy into here to sell into here. Yep, that's fine. Great idea. I could probably see it coming to even just take out all these lows right now, maybe at the beginning of the week, accumulate here, and then make its run here to then distribute again, right? All that is possible. That's a fine bias to have. Execute it properly. As long as you backtested the way that you want to enter, then you're doing great, right? Because a bias is only a bias. Like, what's interesting is if I went, for instance, to Bitcoin right now, and again, I'm not a retail trader and I don't trade retail ways, but the thing is, if I was to, let's just do this really quickly. Let's put this in a smart money folder. Okay, so the thing is, if we looked at this from a retail perspective, what's funny is the bias, I think, would probably be around the same thing, right? If you even did a top-down analysis on Bitcoin, okay, I don't know how to do this right now because I'm not that retail-like, but the thing is, if you did an analysis on this the retail way, and you said, okay, so I got my, channel, my little channel here, you can see it's reaching up into that channel. You have this channel right here that is being formed, maybe even some kind of triangle, right? The expectation, again, could be the same thing. You have a false break into some of the higher highs here, testing some of these neck and head and shoulders and nonsense here, right? The breakdown, this break of this will show you that there's now a breakout, and you can catch that all the way down into these cells, which is still in line with our Bitcoin bias of seeing prices potentially either break higher to finally fulfill some areas here if it wants to, and then break all the way down, or to break down from here, right? The bias can almost be the same. What's really going to matter is the way you look to enter it. Right? There's retail ways to view a market that will be literally almost the same with how we view it smart money wise. But the way to enter is going to be a lot harder in a lot of senses for retail. It could be a lot worse RR wise. There could be a lot more emotions because, there's a lot more uncertainty about what you're doing, especially with zones and stuff like that, right? For us, it's really easy because either our zone holds or it doesn't, right? That's pretty much it. Let's keep going here. Let's reopen the smart money stuff. I'll have Compson Man money this time next year. Nice. Ari E, yeah, was my question. You have probably covered this before. It's no problem. Let's take a look at it. But how do you stop yourself from being married to your bias? Oh, okay, yeah. So this is actually that question. This is what I just dealt with, right? How do you stop yourself being married from the bias? Ask yourself the question, am I the Compson Man? If the answer is no, then realize that all of this, when you have a zone and you have an arrow drawn in like this, does not have to play out for shit. All you have to do is look for the ways that price can get to your bias until that bias is invalidated. Right? All I'm expecting right now is for price to make its way up into here. Now, I will trade every movement that I can into the buys up into here. Now, the second one of that is invalidated with some of the protected lows, that bias is gone. And the bias becomes, let's wait for price to try and get into here, right? And until that's invalidated somehow with another move of such sort, that will be invalidated because the bias doesn't mean shit. All it means is, that's where you're going to execute upon. And if price is to set up in a way that's going to execute that bias, that's how you get into it. Right? So hopefully that answered that question from earlier. Most people want that Steve Harvey money. I'm going for that Compson Man money. Nice, man. Nice. GU bias. Okay, so we can take one more look at the GU bias. So it looks like you have a very similar thing. You have these lows linked out too, so you understand you're cognizant of those. Good idea to have the buys up into some areas up here. That's fine. I like it. Good idea. Let's just see what happens. This is all a fine bias. Just saying. It's fine. Good. I like the way you guys are. I like the way you guys are incorporating all the stuff, so this is perfect. Anton, I'm still having trouble differentiating between candlestick movements versus higher time frame movements, and thus usually ending up counter trend trading. So the thing is, I don't even believe in counter trend trading. If any of you have followed me long enough, there's no such thing in my book, because at every single point you're in some kind of trend, you're counter trading it if you're on any other lower trend, right? If you're 6 month bullish but you're trading a bearish 15-minute setup, you're technically counter trend, right? But that, it doesn't really mean that, because you're zone trading, you're not counter trend or trend trading, right? You technically, it's almost like support resistance, and you're trading between the zones, almost like you're trading zone to zone. But what you're doing is you're also putting that together with there we go, with smart money, right? So you understand how those zones actually operate in terms of mitigations, and when you get involved on these zones, you're not counter trend trading against the downtrend. But when this happens, then you're available to either partial, or if you're in part of a larger trend, you understand you can take this to higher prices, right? Like there's not really a counter trend and a non-trend. It's kind of the thing I spoke about at the beginning, where you need to start to diverge yourself away from just thinking in terms of, you know, price can only move like this, because that's not true. Like, this is how we teach, because it's an easy way to get into it and understand it. But over time, you quickly understand that just because structure is holding doesn't mean it will hold. And then it can easily do any of these things, right, over and over again. That's why we have mentfx blocks. That's why we understand that, you know, institutionally, structure can develop in a number of ways, and we can be a part of the intermediary movements between the bias to the new mentfx block with the actual trend of that specific time frame, or the lower trend that is against it. Sorry, hope that made a little bit of sense. But in actuality, you need to you shouldn't even differentiate or try to think about it as a different thing, right? Because, like, if you look at this buy, technically this buy here is counter trend, but also it's very pro trend if you're actually looking at this as a break, right? If you're zooming out, then it's counter trend, right? But then if you zoom out again, then it's pro trend, because it's part of this bullish push. But if you zoom out again, right, then it's counter trend, because this is actually a break and it's actually going lower, right? But if you zoom out again, well, then it's pro trend, because the trend is up. But if you zoom out again, and so on and so forth, right? There is no counter trend or pro trend. I mean, there is, but there isn't. Hopefully that kind of made some sense with the example here, specifically. But let's keep going. Please, can you look at GA? Maybe maybe as we keep going, I want to look at EU, just because I'm not going to be looking at GA over the week, but I'll definitely look at GA. If you have a markup or something, I'll just tell you what I think about it. Do you have any advice for emotions? You rarely talk about emotions. Yeah, hold yourself accountable if it's something you want to do for the rest of your life. Recognize that it's somewhat of a job, and it requires accountability from yourself. You're not accountable to anyone but yourself. You are your own boss. You know when you're doing stupid shit. Don't do stupid shit. And if you do stupid shit, share it with the group so we can all tell you you're being dumb. I don't know, like, emotions are always going to be a bitch. Emotions suck. We all know when we become emotional and when we're doing things emotionally, even though we know it, we'll pursue it. So just hold yourself more accountable to them. Recognize why you're doing what you're doing, right? You're not here to play around. You're not here for a night out in Vegas to, you know, whatever, maybe make some, maybe lose some. It's all good either way. No, you're here to make a living. You're here to do this full time, and you're here to, what I'm guessing for a lot of you, create freedom out of your own time and not have to work for anyone except for yourself, and do this during whatever time you want to do it wherever you want to do it from, so on and so forth, right? Just think, you have to just sit down and think with yourself, ultimately. Sebastian, the weekly meme, mentfx merch. All right, let's check it out. mentfx resale when the trend line gets liquidated. Beautiful. That's the merch right there. Yeah, you guys got to get yourself some merch. If you're not waking up every morning and putting on the mentfx hoodie, then you're gonna be losing money. Not actually. Where do you enter in Wyckoff, for example? On the test, usually right here. If this is spring, I enter on the test of the last down move, right? Because what you're looking at is liquidation of lows, the moves higher, and you're looking for those to get mitigated before going higher. That's where you're entering on the Wyckoff. You took a trade on gold on Monday night in which you took additional positions with MBs as market went up. Can you give us a breakdown? Sheesh, if I can find it. Let's see. Start of the week, Monday. When was Monday? When was Monday? 26. Somewhere inside of here. Okay. Okay. Let's go look at the Instagram. I mean, not the Instagram. Let's go look at this. We'll find gold. 28. This was Euro USD. Okay. Still Euro USD. Where's my mentfx blocks, guys? Where'd they go? That's probably higher up, isn't it? Oh, was it here? Oh, there it is. Okay, cool. Nice. Okay, so it's a 15-second at 10:30 p.m. 26. Okay, cool. 26, 10:30 p.m. 8, 9. So around. Oh, so down here, I think. Is this where I got it? Maybe in here? Where the fuck? Hold on. Let's go to 15-second. Let's go find this. Oh, yeah. It wasn't here. Wasn't it? Let me make sure. Yeah, this is it. Okay, cool. I mean, yeah, let's just go backwards now. I mean, you can always do this yourself too, but let's just go backwards in time, take a look at why, where, and how this happened. So, oh, okay. So I remember I had a supply zone up here. Price tapped into it, right? As price tapped into it, began to play down. As it broke structure here, I was looking for it to trade back into this demand supply zone up here to keep going lower, which means that when this shifted structure right here to go higher, right? Bullish structure and tapped into here, I was looking for continuations up to here, which means that this last down move before the up move, which you could have denoted a number of ways, but if you look at the actual down move, which is this, right? Again, a wick that goes below that is not mitigated is still an unmitigated demand zone. That's where we were looking at. We get lower on that and take a look inside there, and what you see is we had this structure break on a 1 minute. That 1 minute structure break is then met with this, or you could argue this last demand zone, right? We go inside of that demand zone on that lower time frame. Okay, and here's your Wyckoff. Here's your break of structure. That's your first ment block being confirmed, right? That's your first entry. Second ment block right here, that can be your second entry. Ment block, that can be your third entry. So this is where the third entry was as it broke, right? So this is just a buy stop as is, just like that. And then after that, I wouldn't have kept on drawing in these because I would have expected it to come and tap into it. So I wasn't looking at this as a ment block. If you did, then fantastic. You probably would have seen that into this, and then it would have taken off. But I didn't do that because I like to see, as you all know, the mitigation, right? They're subjective, but that's the 3 ment block special basically of how you could have gotten involved. So the first one was the risk entry off that one, which was just this Wyckoff. The second one was confirming this one, and that got mitigated here, so the entry was here, right? And then the last entry was here, and at that point you can either break even this one if you entered it a little bit deeper, especially if you refined it to the last down before the up move, because inside of this ment block there's also this ment block, right? And that's where that tapped, which is just about the 50%, I bet. Yeah, there you go, right? So that was that behind that entry. And again, you guys can do this with almost any of the entries I send out. You can just go and take a look at the time it was, look at the bottom, go find it, and then just kind of track yourself backwards and work yourself through, you know, how did this entry happen? And again, it's still in line with everything we've ever spoken about, right? You have a zone, you have price tap into it, you either have ment blocks form and you get involved on those, right? Or you see Wyckoff form and you get involved in that, right? mentfx, simplicity, isn't it beautiful? Goddamn. Anyway, let's keep going. I'm struggling to predict which zone is next to be mitigated. I know where all the potential zones are, but my order of which is going to be mitigated is usually wrong. What can I do to help fix this? Decide on a zone that is higher and a zone that is lower. Set an alarm here, set an alarm here, and whichever gets hit first, go confirm it. That's it. Don't try to go, I want to see this and then this and this. Just try this. Or go and test this concept right here. You just need to see it happen a few times, and then your mind kind of starts to click with it. Otherwise, just do more forward testing, do some more journaling, make sure you record your trades or record your ideas and see how they play out the next day, and just ask yourself about what occurred, right? I know Vetsky said something about how he usually at the end of the day or when he wakes up goes to the day before and just replays all day's price action and just kind of predicts and tries to work with what's happening, right? It's just about, you know, taking time out of your day and dedicating a lot of it to learning. A lot of this industry is just kind of understanding that personal learning is very crucial. A lot of people don't want to do that. I bet even a lot of you that join the mentorship don't want to do that, but then a lot of you also quickly start to recognize that individual like setting up, backtesting, and all this stuff is the real thing that makes you learn, right? Like I can give you the holy grail 5 million times, but unless I went and coded Wyckoff for you into an algorithm that, you know, like just worked, it wouldn't mean shit, right? And at that point, you're not learning, you're taking signals, right? And we're not a signal group, as you all know. We breed traders, and we have for a while now. So you know it's possible, you've seen it possible, so just stick to it and do that. But yeah, just for this one, definitely try out, just find one at the top, find one at the bottom, whichever two you're happy with, and literally set an alert. Whichever one gets hit first, that's which one you're going to go and confirm. Gets above it, done. Go set up a new one, right? Again, this one or this one gets hit first, that's the one you're going to use. Onwards and onwards, right? Hopefully that that explains some stuff. Could you look at UJ structure? I hate UJ, but maybe just go UJ, GA. You guys can keep dropping them, but I'm just gonna kind of write these out just as we go, so I know which ones you guys want me to look at. Because I still want to look at EU in a second, and I just looked at gold for some of you for this, so you know. Do you think entries are more important or picking POIs? Because I'm getting my entry confirmation, but still constantly getting stopped out. I think it's more so entries, but also, I mean, the POIs somewhat matter, right? The POIs have to have a little bit of reason, but I don't know, even then they kind of don't, because in a retail sense, like I've done this with previous one-on-one clients before I had a YouTube channel or anything. I'd show them stuff like, okay, let's play, you know, support resistance games. You know, like I'd literally go back in time just to show them that, you know, it's almost the same thing, and just go, okay, you have your support resistances, you know, you have your support resistances wherever, like, I don't know, like here, sure. And we'd be using these zones to confirm either Wyckoff on the inside. So this might have been actually a failed Wyckoff, you can see, right? So that might have been a failed Wyckoff. Here could have been a 1 Wyckoff, right? Break, entry, partial, break even, accumulation, break, entry, partial, almost break even. Does it keep going? I don't know. Yeah, there we go. Partial again, maybe if you're happy with that, or you can keep holding it, or like trail it and get stopped, right? Something like that. But the thing is, there's multiple ways you can find POIs. Because I'm getting my entry confirmation, but still constantly getting stopped out. Yeah, I think the entry confirmation just works, but you have to have a set system for how you want to always do it and where you want to do it. I don't think it's so much about picking POIs, because I can pick the most random POIs, but they will hold. But also I'll pick POIs that are unmitigated oftentimes, right? And so I know there's going to be some kind of mitigation oftentimes, which helps a lot as well. All right, let's get out of this one. Going for a little bit. If possible, can we have a quick look at NAS? Maybe. It may go down because I missed an imbalance. I don't know what this was about. Maybe GU or something. I forget. Can you go over institutional BOS? Oh, right. So I spoke a little bit with you before. I kind of went over a little bit of that institutional side of things, but again, from section 1, a lot of you need to recognize that candlestick structure and institutional structure is very different, right? If we were to line out institutional structure on this, I know this is hindsight, but the way we do it is low, high, low, high, low, high, low, high, low, right? And the expectation is that this will hold bullishness. Now, the institutional break structure comes from this break, okay? That's the institutional break. And even inside there, there's going to be candlestick structure that's bearish, 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 bullish, 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 bearish, bullish, bullish, bearish, all still bearish, bearish, into bullish, into potential bullishness, into the continuation bearish, right? And that's all inside of just this one's time frames institutional setup, right? And this is only on a 5-minute, because institutional structure beyond time frames is going to be different, because this same institutional structure on a 1 hour is just going to be part of one move. What do I mean by that, right? Institutionally, structure wise, this could honestly be looked at literally as a high, low, high, potentially low, right? High, low, high, low, and now we're in this move back, right? Institutionally, it's bearish, and the break of structure institutionally would only come from here. You understand that? So again, there's a difference between institutional breaks and candlestick breaks, and you use them to understand where you are in a large move. And if you want to be part of long swing trades that you get involved on like that, this is how you would do it. You'd have to look at a market from the standpoint of all this, right? I don't do that. Why? Because I day trade like mad. I literally, like, my longest, usually my trades last literally what, like 5-10 minutes, right? Even less. I don't know if you guys remember, there was that EU trade on the 5 second. Actually, it was on the 1 second. It was in this zone. So if you guys remember, I was looking at this as a potential area for price to buy up into here again. It didn't do that at all, but there was still an entry here that worked, right? It was on a 1 second chart. Let's go find it and talk about it really quickly. I think it was right here. Yeah, it was right here. So you had this come in. I didn't see any Wyckoff here. If you saw this as Wyckoff, you could have maybe taken that, but that got liquidated. I think this low came lower. Oh no, it didn't. Either way, I was looking at this as an overall down move before an up move, right? Price got higher, then began to actually mitigate it. Lows liquidated, break of structure right here, comes right back in. This is your entry, continuation. Again, the entry is not actually at this low. I didn't actually use this low. I used this. So my entry is at 50% of the ment block. Then price comes back into it and look what it does. Lows, liquidated, break of structure, another entry right there. Those were my 2 entries, partialed right here, partialed again at this supply zone, and then it broke even, and then it went higher, right? But again, same confirmation, same shit. But in this trade overall, like how long was this? If you look at the actual last entry to the close, this was a 45-second trade, right? And overall that made about, I think, 1 to 5, 1 to 4, 4%. So, you know, it's fun. We love it. Bahamas must be nice. Oh, thank you. GA. Okay. We might look at GA. Have a great time there, man. Oh, thank you guys. I appreciate it. Enjoy it, man. You deserve it. Yo, you guys are too sweet. But I'll definitely make sure to, I'll try my best to get something out for you guys, of course. And if I don't, then expect an amazing webinar after. Can you check gold later, bro? Sure, we can maybe look at gold. I do want to look at EU because that's what I will be trading to, or so I usually trade. Let's say you take 2 trades and directly hit 2 losses. After how many trades do you become back in profit after hitting minus 2%? Well, that just depends on if you hit stuff, right? It's just about your rules. Like I have a rule where if I get 2 losses for an entry, I won't take another at all, and I'll wait for a completely new area and all this stuff. Completely new like bias and everything. There's no, I mean, I can't tell you you're gonna hit 2 losses and then win. I don't know exactly understand what this question means. Let's say you take 2 trades and directly hit 2 losses. Okay, after how many trades do you become back in profit after hitting minus 2%? When you hit the next profitable trade, that takes you above minus 2%, above 0%, right? What's something you could see that would make you want to manually close a position? So actually I did that on gold, I think, but honestly it's a bad way to do it. You shouldn't do something like that just because you should have rules that you've already learned and you know your rules. There's no reason to need to manually close stuff. You should just have a refined way of entering and exiting. But I did have that thing on gold where I had an entry and it just did this around the entry, right? And when it does that around an entry, yes, the entry can still run because there's like a 50-50 that it runs now, right? But also there's a 50-50 that it comes to liquidate all the lows and takes you out. So when this usually happens right at my entry, after I've entered and it happens for a while, I'll usually get out a break even or a mini profit just because I understand that, you know, either this can happen or this can happen. Now the one I exited actually ran 1 to 20 after this right here. And it kept going in my direction. So, you know, unfortunate, right? And if I stuck to my rules, right, then I'd be fine. But emotionally I exited because I didn't like the way that it was forming liquidity on both sides. So that's just how it went for me. It might be an idea to switch on the watermark for webinars. Oh yeah, sorry, I turned it off because I was working with the merch. So I had to get some photos like this, that one merch photo. Where was it? This one. This is actually EU. It's just an EU line chart, but I didn't want the watermark. So this right here, that's EU. So I thought it was kind of cool. And you look at a large structure as Wyckoff to help form a bias, knowing it will get up and down, but using key points as targets or resistance. Yeah, I guess you could say that, right? Yeah, technically, that's kind of the way I trade, right? I have, okay, wait, hold on. So I was about to sip my coffee, but let's explain this one really quick. So we have something like this, right? And this is a break. I already understand that from a bias perspective, no shit, all of you understand, we want to see price make its way into here. Now that means that as it does that, there's going to be so much shit you can do, right? There's going to be distributions in here that give you accumulations at maybe an imbalance or another demand zone here, give you accumulations in here that then give you low time frame structure that accumulates inside of that to come into supply zones here that distribute into an accumulation, into accumulations, which take out the highs here, which finally distribute at the last area up here, give you that distribution, test it, come down to accumulate in that last demand zone, to distribute again at the test on a lower time frame, to then break down into here, to then give you the real entry that goes higher, or that just comes to here and then keeps going on this lower time frame to start running lows because it wants to switch overall structure, right? This is how you view a market. Hopefully that kind of answered your question. And yes, technically, as this all happens, these areas are viewed as areas of potential support resistance, right? That's all it is. But they're, in our case, supply and demand that have mitigations that might need to take place, right? So it's almost a similar way of explaining it, but the way we draw these areas out and the reason we draw them out and understand why these mitigations happen is very different from the standpoint of retail, where it's kind of like, okay, you know, this area seems like it had some rejection for a while. So, you know, in the future, let's just reject at that area. Yo, shit, maybe we should trade resistance. That's kind of fucking sweet. Wait, I gotta do a whole rethinking of my strategy. Sheesh. Okay, not really, because I knew it came up here, so I was just kind of drawing that out. But again, it is technically just zones, right? We're zone trading. But there's an idea behind what we're doing and why the mitigations are holding at certain areas, right? Oh, that's great. Let's look at some more images. Here we go. GA. Okay, so this is GA. Cool. Ugly fucking pair. I don't know why any of you like this. But sheesh. All right, we have some breaks here. We have the test of this zone right here. Probably Wyckoff inside here. Break above higher. Expect to come here. It comes to liquidate that area instead. You might have gone stopped on some entry that you might have tried to look at here, but it doesn't even look like, oh, maybe if you looked at this one, there was probably an entry here that you might have gotten stopped on, or you might have even caught it with this wick and then got to partial. So I don't know exactly how that would work. Comes down to test more of this, creates somewhat equal lows, but also is just mitigating this and taking out lows. Creates a ton of liquidity here with imbalance right here. So more likely than not, I would look for confirmation buys off of this area right here as a demand zone. Buys up into here, that's fine. I like that idea of seeing buys up into there. I wouldn't take this sell just because, especially since I said that this imbalance is what it might want to target. So it might just literally target right above there. So be careful with that. I'd confirm that too. This area here, it's all really filled in. So if it kind of goes down, I think it'll just be going down to fill in the inefficiencies here and potentially these lows. And if it gets through that, it might just break down. Just completely start breaking down. Overall though, if market opened, I'd probably look for sells at this supply or buys at this demand, right? So there's an example of, that's an example of, you know, if you don't know which area wants to go to first, just go boom, boom, whatever hits, let's watch that, right? And then, what is it? Manage your position, okay? Got another image here. Oh yeah, so we just looked at that one. I remember that EU sell back testing. Beautiful. Coming up, ment block. Finally breaks, next ment block, breaks, refined inside the ment block, probably Wyckoff inside of there. I can see it on lower time frame, right? Highs, liquidated, break a structure, retest, continuation lower. So that's a fine entry. It's pretty good. Luca, EA, yeah, so long downtrend after a huge break of structure, right? So here's an example of, you know, pro trend versus counter trend. Doesn't really exist because this is your pro trend, which is break structure higher, but then, you know, the entire, for an hour, or how long is this? For a few hours, like, yeah, for like a few hours, it has tons of supply zones, entries, supply zones, entries, supply zones, entries, supply zones, entries, supply zones, one more entry until it finally becomes part of the actual accumulation go higher, right? Hi Anton, if we have a perfect valid supply zone, not mitigated with imbalance underneath, but it's not breaking structure on that particular time frame, I understand it's valid, but would you consider to trade it? Yes. Yes, I would. Yes. Indeed, I would. Plus, you have to remember that on an 8-hour chart, if you go to an 8-hour chart, this right here is probably a swing low. This is a break of structure, and that's, again, one of those areas, right? You have to think about market fractally. Just because there's no market break on the daily doesn't mean it can't give you that next, right? But also, since GJ technically right now is bullish, and we just tapped into this demand zone and actually had decent Wyckoff, you should expect that this sell could either come into the imbalances here, the demand zone here, or to keep breaking lower, right? This is why partials exist. This is why we mitigate our, not mitigate, this is why we manage our positions, okay? Hold buying position on EU. Beautiful. Yeah, if you had a POI here too, that's really nice. Break above, last down move before the up move. Technically, like here, if you 50% that, I think this mentfx block, if you look at 50% of it, literally perfect entry. Overall though, great entry, did great. I see you have a mentfx block probably on a lower time frame, and you had liquidity, take a liquidity, break again, and again there's Wyckoff right here. So if you miss this, another entry right here, off again the mentfx block, fantastic. Then you can follow that, right? Ment block, entry 1, ment block, entry 2, ment block, entry 3, ment block, entry 4. Does this get below it? I think it does. That might take you out. All right, cool. Very nice, very nice. Here we got some Elliott, Oddcad, Fibs, Jesus. Get this shit out of my, get it out of here, man. Some kind of accumulation, break higher, break below, supply zone, good entry here, break down, look for some buys at demand zones here, really all mitigated. So maybe this wick right here, but I think this might either go up here to give you sells way lower or higher to give you sells way lower, right? So again, as we look at any markup or chart, you guys should have an instant like idea about what you want to see it do. You see how as I open something, I just kind of follow it along, tell a story about it, and see what I would want to see it do. And then if that gets confirmed, that's how I get involved, right? This is why I always stress that you can do you can get away with just trading one pair. When you look at more, it gets so confusing. I can't do more than one pair in a week just because my brain cannot handle it, right? Just making sure everyone all right? Everyone can still hear everything? Cool? Everyone doing great? I'll go back up to the questions in a second, I promise. All G? Okay, cool. Very good to hear. Oh, fantastic. All right, let's get up. Let's get back up here. Keep working through some of these. Oh no, did I miss it? Wait, where was I? Oh no, we didn't get. Holy shit, you guys wrote a lot. Respect. I'm having trouble sometimes determining if demand or supply zone has been mitigated. Does the retracement to a demand or supply zone have to hit the wick, the open of the candle, or 50% of the candle is mitigated? An open hit of the wick is already a mitigation, right? But that does not mean that there can't be more mitigations. You should definitely watch the sections because I think I talk about this a lot. Just because it's mitigated does not mean it can't be mitigated. That's one of the biggest rules with mentfx blocks. And yes, a wick counts because a wick on another time frame is a body, and also a wick is the demonstration of the first buying or selling that took place in that area on behalf of the composite man. Okay. Hey, Ment, can you show me an entry that is just based on mentfx block and supply and demand using only 15 minutes and entry on 1 minute? Sure. Let's do that just really quick. I think we can do that. Let's just go on EU. Not really a big deal. 15-minute. So let's just find. Okay. Here we go. 15-minute supply zone. Okay, that's a 15-minute supply zone with a break of structure, whatever you want to call it. Okay. You get down to the 1 minute. Okay. Price comes up into it. Highs liquidated, break a structure. Entry off the last up move before the down move. Partial, break even. Highs, liquidated, break a structure. Maybe you go up to a 5 minute. Entry off the last up move before the down move. So maybe somewhere in here. Take a sell there. You know, above the high, going lower. I don't know, how does this work? Okay, so that one doesn't hit, but that was an example of the 1 minute. Okay. So zone, 1 minute, Wyckoff, break a structure, last up move before the down move, entry, partial, however you want to do that. Maybe take it all the way down to some demand zone, break even. All right, that's an example of that. Screenshot. Let's take a look. What do we got here? Bitcoin USD 1 minute. Oh, nice. Yeah, that's good. So you had a zone mini distribution, not really. Maybe a smaller distribution in here. Looks like you had a mentfx block in there. You sold the mentfx block, took it down, maybe partialed here, maybe took it down to where? Oh, this accumulation. Okay, yeah, good. Good usage. We appreciate that. That's good. I like it. I was looking for sells while everyone else was looking for buys, and still you were profitable. That is the beauty of smart money. Mitigated supply and demand zones. What is mitigated and what is not? What do you mean? Sorry, can you specify a question a little bit? Or I think you might have been coming back on someone else. Do you use vertical volume? Not at all. It's useless. Okay, it's not useless. You can maybe go incorporate it. But the thing is, I think what you're talking about right now is the fixed range, I think. Right? Like stuff like this, you know, and the targeting volume. The reality is, if you guys actually understand what we're doing, you should know easily where volume is. If I looked at anywhere here and just said, okay, from this swing to this swing, where was all the volume? A lot of you should be able to say it was either right here or right here. So if I drew a fixed range from here to here, it should usually show volume mostly inside here. If I took a swing from here to here, it should show most of the volume inside of here, most likely, right? Now, I don't know if that's true, but you can already anticipate that, and that doesn't really help me with anything, right? So if we take the fixed range thing and go from this swing to this swing, right? Yeah, so like I said, in here, right, instead of up here. If we took more of this side of things, there you go, right? So if you take more of this zone in, it shows you the volume up here. If you take less of it in, it shows the volume down here, just like we said. If we took the next swing, which is, like I said, from here to here, it's going to show it inside of this, right? So if we go like that to right here, should show it in here. There you go, right? You don't need the vertical volume because you can predict where it's going to be because you know how accumulation distribution occurs, right? If we took this swing to this swing, most likely most volume would be right along this line right here, right? Let's take a look. So let's say we took, I don't know, this swing to this swing, right? Okay, yeah, so most volume's in here, but if we take into account this data too, boom, right here. There you go, right? You can see the volume. You don't need to draw the thing on to know. Again, you take this zone to this zone, you're going to see most volume where? In here, probably. I'm going to take a look at that. Strange. Here we go, just like that, right? There you go. So either I went and knew that you were going to ask me this question and found all these zones before, or I understand how price is developed and where you know vertical volume is going to exist. So hopefully that showed you a little bit of that. You don't need it. It's not useful. You know exactly where accumulation distribution occurs, especially when you look at something at a market, right? So RSA, was that what you were asking? I'm just going to highlight this so I can get back down here to see what everyone was saying. That was a good demonstration with the volume indicator. Thank you. So hopefully, did that make some sense though concerning like vertical volume and stuff? You don't need it because you know exactly where it is. If you understand how the market is being distributed and accumulated, you can fully see exactly where that liquidity or that volume actually exists, right? If we took this high to this low, where's it going to be? A lot of you know. Probably, almost guaranteed around here, right? Take a look from this high. Can I be wrong once? That'd be great. Oh, did it delete? Whoops. Fixed range. Because people have asked me, that's why I have it saved. Here we go. So from this high to this low, should be inside there. Yeah, there you go. Right? I mean, that was a little bit off, but no difference. Because you know where the volume is when you watch a market develop and watch it get liquidated. You don't need to see it with the tool. You can see it with your eyes. And your eyes will always go to the areas that already liquidated those areas. So, you know what you're already aiming for in the first place as well. All right, let's go back up here, find where we were. We're about an hour and 5 minutes in, so I'll try to get through most of this stuff. Maybe I'll speed up a little bit. If I don't get around something, please just drop it or in like the next webinar or something. But I'll keep going. GJ, let's look at that really quick. Big ment block, institutionally bullish. That's fine. Remember, I just spoke a little bit about GJ and I said institutionally it is bullish. Very good. Break structure lower, ment block. Again, institutionally on a lower time frame, it's bearish here, bullish here, expecting it to come into some of these zones and potentially even lower. Doesn't look like there's anywhere to go lower unless it's right here. Great way of demonstrating that. That's fine. If there is buys in here, recognize that it doesn't have to go make new highs. It can come into 50% of this or even some of the supply zones in here. Overall, great bias. I like it. Any books you recommend? Not really. I don't really read books. But 12 Rules for Life by Jordan Peterson. It's not a trading book at all. Great book though. Will help you a lot with your own life. That's good. I read Studies in Tapering. I read this book right here by Wyckoff, Richard Wyckoff, and it was okay. It was in 1900, so it was a really old book. There was no charts at the time, but it talks a little bit about what we do, about psychology, and how the successful are made and how the people that fail continue to stay Failing. It's a good book on that. It's not going to help you with strategy, but it's going to help you a lot with your own mindset and stuff like that. So check that out too. I don't know. I don't read books like that. Like trading books. I read books about, you know, interesting and vivid stories that teach you something about yourself, about people, and you can adapt that to trading. That's the way I like to learn. For me, it's a culmination of knowledge and putting stuff together, right? Like if you've ever heard me talk, even I'll be like, you know, part of getting involved in the market is like letting your friend jump off the cliff first, right? It's partly it's trading, but partly it's life experience and what you would do in real life too, right? If you can't relate what you do on trading to real life and can't see the mistakes in what you do in real life versus in trading, then it's going to be really hard to just, you know, create a whole world around trading but not know how you're going to operate in the real world. I don't know if that made any sense. I kind of sound like I'm probably on crack, but that's how I think about that. And